It could be 5,000 for 10 people, that the circumstances are different. So it's good to understand the customer, but I'll tell them plan for liquidity, plan for security. You need to risk your money, man. Please don't be too secure.
Right.
Look out for opportunities, even if it's farming, try it out. If you can't try it, partner. I think the best thing to do is that we are all doing small things very well, and we are comfortable with the small earning. Yet if the 3 or 4 of us come together and invest in your business.
Hi guys, welcome to Uganda. My name is Johnny Tamai and this is the Repart podcast. Now, as you can see, it's Women Empowerment Friday today. We're about to send a shower so we can just do this as the ladies. But anyway, guys, introduce yourselves to our viewers.
Hi, my name's Tina, Ugandan, British, but Ugandan.
Okay, Tina. And on my right.
Okay. Sharon, very Ugandan. Not British.
Yeah.
But yes, Ugandan. Sharon Tumushabe is my name. I'm happy to be here today.
Okay.
And looking forward to an exciting podcast.
Okay.
She's very beautiful and very nice also. Do you know she bought us something to drink before the podcast started? And the first time she came on, she bought lunch, but they will never bring nothing.
Oh my God.
Never.
On the internet? You're just going to put some glass like that on there.
But no, it's O'Shea Duke Jackson, Sacramento, California, African-American, living in Uganda. Let's get into it.
Yeah. Before I let O'Shea take the lead, Sharon, just tell the people what you do exactly.
Okay, so basically Sharon is an investment advisor. I've been doing this for the last 10 years. And in this industry back home in Uganda, I deal with regulated fund managers. I recently started my own company, Legacy Hills Investments. So now I give independent investment advice. So if you're looking for that person that you can trust to share ideas with and share options with you, now I'm not tied to any fund manager. I'm actually working with all the fund managers back home here. So it's very exciting.
And the first time we interviewed you, you were working with Xeno.
Yes. Yeah. I did 6 years with Xeno, and Xeno is my baby.
Oh.
Xeno is my baby. So first Ugandan founded investment fund, built it from 0 to 50,000 users to 55 billion in 6 years. It's part of my journey, and I'm very excited that I'm starting a new journey now where I'm able to partner with all fund managers. I don't have to be tied to Xeno to be able to advise anybody. But yes, it's been humbling. That was the last time I was on the podcast. Yes.
Okay, and I was I believe I was not in the country when you were interviewed, but we've been getting so many emails, so many people. Our audience is more or less diasporan based, whether that's the African American community, Ugandan, British community, whoever. And people want to know, in general, some of the better ways to invest in the country like Uganda without being scammed, losing money, regulated. And is it possible that the diaspora can do it in the country with these, particular funds that are out there and what's available to them? So I will kind of just let you explain what is available and how they can do it.
Okay, so for anybody out in the diaspora, what I typically tell clients or people I interact with, for you to avoid the scams, you need to know where your money is invested. So the best thing to do is look out for regulated funds. So our government is very keen on licensing and regulating funds to ensure that the investors are protected. So before you think about sending your money back home to a third party, to anybody, family or friends, ensure that at least you're able to do it by yourself. And there's so many options here where you're able to invest low risk. You have exposure to different assets, and you're able to invest your money from wherever you are in the world, send it directly, and you're able to monitor, at least with technology now, wherever you are in the diaspora, you're able to see how much you've invested, how much it's growing by. And it's very low. The lowest investment in Uganda is $3, which is like 10,000 Ugandan shillings. We see 20,000. We have 50,000. We have 100,000. So depending on which fund manager you choose to trust, because it comes from you, the individual. How do you actually gel with this particular brand? If you're in the diaspora, you're having access to an online platform where you're able to track and see how your money is growing. It's very safe, very, very safe. So the opportunities are so many.
Let me ask you this, because you said spread across different assets. Now, in the United States, our funds, like I'm a Fidelity customer personally. You have Vanguard, BlackRock, Charles Schwab.
Yes.
So many different ones, you know. People are gonna they understand the language of index funds, ETFs, stocks, REITs, things like that, right? That's the language in the American investment facility.
Yes.
Bonds are the same.
Yes.
But what's the difference here? And what is the language? You know, there's unit trusts and things like that. So what's the difference of?
So back home, it's mutual funds.
Yes.
So just like you have, it's good you mentioned ETFs. We don't have those here, but at least we have mutual funds.
Yes.
And a mutual fund is more or less like a collective investment scheme. So it depends which country you're from, whether you're from the UK or US, but it's collective investment scheme. That's what we call it here. So it's a mutual fund. Yes, it's licensed and regulated. It has different players. It has a custodian. So the custodian does the safekeeping of all the investments that people are sending through. So each fund has a custodian. So in Uganda, you would find banks like Stanbic Bank, Standard Chartered, KCB Bank. Those are some of the custodians.
Okay.
So the custodian does the safekeeping of the assets. Then there is a fund manager. So the fund manager in this case is the person that is going to do the research, the execution of the investments, and the decision on which stocks to buy or which assets to buy or which bonds to buy, which ones to sell. So there is a fund manager. And in most cases, the fund manager is the sponsor of the fund. So in this case, if you know Britam, you know Xeno, you know Sanlam, ICE Lion, you know UAP, Old Mutual.
Yes.
So those are the fund managers, and usually they are the sponsors. They start the fund, but your money is safe. There's a trustee, and in this case, the trustee does the day-to-day monitoring to make sure that whatever the fund manager is doing is the right thing, and they're following the right investment strategy. They become the legal owners who are representing all the thousands of the investors that are investing in these funds. So at least you have somebody that has an eye on the fund daily on your behalf as the investor. Then we have auditors. The different types of auditors, Ernst & Young, depending whichever auditor each fund wants to have. Each fund has its own auditor. So the auditor is there to make sure that whatever investment that has been done and the returns that are being declared are actually the correct things that the fund manager is passing on to. There are administrators, especially if it's a pension scheme as well. So the administrators also make sure that they are doing the day-to-day tracking of your interest, the investment, the money that has been invested. So it's a whole lot of different players that are managing this particular collective investment scheme, or what we would call a mutual fund.
Okay.
So,
Before I turn it over to young ladies, I noticed with Britam, because we are Britam customers,
yes,
and I believe some of us were Xeno customers here.
yes.
For certain things, I see like the more you put in, it might be even a better rate. Is that true?
So the rate is the same.
It's the same. Okay.
Yeah, the rate is the same depending on which fund. So maybe let's talk about the funds.
Yes.
So different fund managers have different funds. There are low risk funds.
Okay.
So low risk, you're looking at investments that are short term, anything below 1 year. So that's money markets. You'd find other fund managers having an umbrella scheme or an umbrella fund. And usually umbrella, it's more for retirement.
Okay.
So people that want to save for retirement, besides NSSF, which is the mandatory one, you're able to go ahead and have a retirement account, but which is an umbrella. So in the umbrella, you'd find both short-term and long-term investments like treasury bills, bonds, a bit of stocks.
Okay.
Some umbrella will not invest in stocks. So you need to know which fund and how is it structured, how is it invested. And also an investor needs to know that some of these assets are low risk, low return. Others are high risk, high return. So when you talk about stocks, those are listed companies on the stock exchange, the likes of MTN, Umeme, Bank of Baroda, DFCU. Oh, you know these things. Yeah. So all those companies that are listed on the stock exchange are available for any Ugandan to invest in, and majority of these funds actually go ahead and buy these stocks on behalf of their different investors. So what people need to know is first, where am I investing?
Sure.
How long am I investing for? What risks am I willing to take? Am I willing to invest long term so the short term volatility is okay? Then you can go for a balanced fund. When you get back home here, people don't want to invest in balanced funds because they feel that sometimes when they see a negative gain, they get discouraged. They feel like, oh, this stock has dropped in price. Where am I losing money? And then Ugandans don't like to lose money. Nobody wants to lose money. We want to make money.
Yeah.
But yes, the certain funds that are a bit risky, they give higher yields over the long term, 5-10 years. And then others are for people that are having short term goals like treasury bills, bonds, fixed deposits.
Yeah.
And did you know the most efficient way for you to invest in financial assets is using collective investments because it's tax free.
Yeah.
You don't have to pay taxes.
Well, before we go into the collective investments, I want to just talk about, because I know it's in the United States bond market, it's somewhere between 1% to 4%, something like that. Now, we were talking about some of these funds that might have a combination of all of these different things going into one fund because of the manager.
Yes.
And some of the rates can be between 9 to sometimes 12 or 13%.
Yes.
For an American mind, that's like, wow, it's high. Now, I just want to ask you this, because I know that's in the Ugandan shilling market, but some people, like I think Sanlam in Kenya, they can even allow you to deposit your money in dollars. Some funds allow you to do that?
Yes, actually. Back home here, I think it's Britam UAP, Old Mutual, that have dollar investments. So in case you want to do your investments in dollars, but the returns will not be the 10%.
Oh,
The returns, if you invest in dollars, the returns are between 2 to about maybe 4, 3.5, 5%. And these rates keep changing depending on the times. So the rates are not consistent. Depending on the time you're investing, that's when they'll give you a particular rate. That's if you're investing in dollars. But majority of the funds do shillings investment. So you'll have to change your dollars into shillings. And then you're able to make the investment and then get the yields of 9% to 18% actually if you're going directly. If it's the funds, the average of the funds is between 10 to about 12.7%, at least for the current rates I know. And especially if you're investing in the conservative investments that are low risk debt assets, like you're lending money, you're not buying shares. With shares, you can actually lose, you can lose value. You could find that some stocks drop in price. So you can find a negative yield or gain. But then sometimes you can really see that usually those stocks are actually...
So, guys, it's not like 12% per month. It's per year, per annum, right? And because how my Britam reflects is sometimes I'll get like almost a 1% a month on my total balance or 0.9% of a percent, something like that. But go ahead, Joe. Any questions?
I did. I'll let Tina ask.
Yeah, I have a question.
Yeah.
Okay, so I think here, like in Uganda, typically, right, they but a lot of people have not been raised to sort of invest money, particularly. I think it's only recently that now, I think initially it was go to school, get into the workforce. Then it's go to school, get into the workforce, get into business. So like, what advice would you have for someone who is absolutely clueless? So like investing for dummies, how do they start? Where do they? No, genuinely, because I feel like I'm listening to you and I'm hearing so much and I'm just like, okay, like, I'm super interested, but like if someone's watching it back and they're not catching a lot of the dialogue, how would you break it down for like those people?
Okay, so investment for beginners, I would say trust a professional to do it for you. You can never go wrong there because they've been doing this for a long time. They've gone to school. They're certified financial analysts that have gone to school to actually know how to value these things, when to get in, when to go out. Of course, nobody knows the future, but at least they would use historical rates to actually guide you on which stock to buy. So if you're really a beginner and you're just starting out, it's risky for you to just get in and do things without knowledge or without a background that gives you the capability to do the right decisions. So using a professional like a fund manager that is licensed and regulated takes all that hassle away from you to start thinking about, okay, which stock to pick, when to buy, when to sell, when do I liquidate? So you take away all that hassle, give it to the fund manager. And that's why I tell people, who are you trusting your money with? If they're not licensed and regulated by Capital Markets Authority, then you are risking your money. then it's like you going into a business and you're trying to see if it's going to work. But if you really want to trust a fund to do investments for you, then it's better. The first step is go to a regulated fund. The capital markets website has all the regulated fund managers on the market, and the different funds are listed. Now, that's where my job comes in. You need an advisor, just like you have a doctor where you go and say, I don't feel well, my heart is not pumping so properly, my adrenaline is high.
Yeah.
You need to have an investment advisor like myself who will then now go ahead and sit down and understand what are your goals, why are you putting this money aside, or why do you even need to have an emergencies account? Why do you need to start planning for retirement early before it's too late? So what the advisor does then is to personalize your goals with the investments. So if you're investing for retirement, the way you invest for retirement is totally different from how you invest for education. Because if you're planning for next term school fees, the way you should invest money for 3 months should be different from how you invest for a house or a holiday in 2 years. So you need somebody to just help you understand what are the opportunities, what are the risks involved. And then you as the customer, when you come to a person like me, I give you all the different options and then you take the decision. So I'm there to just guide you through the process.
I'm sold. I'm going to book a consultation.
Literally,
We're booking a consultation after this.
And how much would that, not how much, but like percentage wise, or if you can't say like, but how much would that cost the person looking for that help?
Okay. Now, personally, I'm partnering with different fund managers. So you don't have to pay me for the advice, provided you take up any of the products.
Okay.
Or if you invest with any of my partners, I'm good.
Okay.
Yeah. So you don't have to pay me for the advice. I'm actually happy to give this advice for free.
Yeah,
So that
like
when
you are right now.
Yes. So that I become your doctor, your financial doctor. So that when you make investments, then the fund manager sorts me out.
Yeah.
Yeah.
Okay, that makes more sense. I had a question. Most of our viewers are people in the diaspora, you know, or foreigners per se. So they may not necessarily be coming back to the continent or to the country, but they would like to invest in the country. What can you tell them?
The opportunity is that we are in a digital world. Technology is here. If you're back home here, you can actually use a feature phone to start investing. Like somebody in Uganda, you can use your MTN, dial *165, and you are able to set up an account, USSD. But if you're in the diaspora, you're able to go on an online platform, and at least majority of all these fund managers, they can either send you electronic forms or you're able to go into a platform, fill out the details. Like I said, we have 10,000, 50,000, 20K, 100,000 shillings. So it's not about how expensive is it. Even with little money, you're able to actually go ahead and make an investment. Yeah. So I usually tell my people, start small, build the trust, and then just keep increasing your amounts as you go along. Yeah. And certain people would prefer not to just have one fund manager. You can have more than one. It doesn't stop you from having multiple fund managers if they're meeting your different goals. You could find that there's a particular fund manager doing dollar investments, but not doing shilling. Not having a good shillings product. Or having a shillings, you get. Yeah. Or somebody says, I want to invest in dollars. I don't want to change my money. And certain fund managers may not have those particular products. So some people, you find that they have more than one fund manager.
Yeah. Okay.
Yes. So just like you have a savings account, you need an investment account.
Yeah.
Makes a lot of sense.
Yes.
Yeah.
Okay.
And what we've noticed, let me not get canceled for this, but we've had a lot of people that have been coming here and failing, not necessarily to Uganda, but it could be Uganda, Ghana, Tanzania, and they don't have a plan. And if I would have knew about, let's say, Britam, Joan was the one that told me about Britam, and I would have did it differently. I would have, just been putting some money aside in Britam every month when I was in the diaspora. And then by the time I would come back, I would have some momentum. Now, let me kind of talk about this collective thing, because a lot of people in the diaspora are kind of coming by themselves. Yes. And there are collective agreements. Is it like SACCOs? Is that you're talking about? Things like that? Is that what it's called?
That's a good one. It's not a SACCO. A SACCO is something different.
Okay.
So a collective investment scheme is where...
like a mutual fund.
It's a mutual fund,
okay,
yes. So different investors come together. They pool money together. We get your 10,000, her 1 billion, her 2 billion.
My 10,000.
Yes. My 1 million shillings. my 1 million shillings.
Yeah.
We pull it together.
Yeah.
And then have a specific strategy, because all these funds have different strategies. So you need to know what strategy is my fund manager using, or this particular fund. Because you could find there's an income fund that is doing more of bonds and less of money markets, because money markets is short term. Then you're going to find other fund managers that are having a money market, a bond fund, an equity fund. Like they're different funds. But what am I saying here is that depending on what your goal is, you should find a fund manager that is able to invest this money for you to help you achieve a certain goal.
Okay, so the question I'm going to ask then is, a lot of people in the diaspora are finding it hard trying to figure these things out by themselves. I was recommending that, hey, maybe the diaspora can, if they want to come to one country, if they feel comfortable, maybe they could make their own particular goal and use a medium like Britam, where, you can invest and do something. Like there's some people that want to build a school in our WhatsApp group.
Yeah.
Things like that. So what I'm saying is, if a group of people are determined to achieve something in the diaspora, because they've been coming back here struggling without any kind of, financial help or community, can they use these investment opportunities that you're talking about to direct towards that goal, and can it be designed for that purpose?
It's very possible.
Okay.
Because now if they're in the diaspora and they have the same goals, they have the same, and they know each other.
Yes.
They're actually fund managers that allow you to invest in groups.
Okay.
So instead of you sending money back to a bank account at home, you set up a group account and you're all able to monitor and see how much each one has contributed. There are some fund managers that are actually having like a family account where it can have over 1,000 members. So they could actually set up that. They are over that side, but they're able to track, see how things are working here. And when they come back here home and it's time to build that school, so the goal is building a school, they've been saving this money, maybe let's say with Xeno or Old Mutual. And then once that money has hit that target, let's say if the target is 100 million, when they get back home, they can access that money anytime with interest that has accrued. And then they're able to invest in other investments. So it doesn't mean that when you start investing in collective investment schemes, you have to be in for the rest of your life. No. I usually tell people, use it as your parking lot, put small monies, grow, invest it, let it grow. Then once it's enough for that particular goal, like building a school, withdraw, go build the school. If the school is there and you need to now save more money or grow more money for, let's say, equipping the school, set another goal as the group in the diaspora, save towards that goal. Let that money that is coming in at different times grow, but also give the members the platform to track and see how their money is growing. So what usually brings issues is people collect money, but the accountability is lacking. So you need to get a fund manager that can give access to all the group members.
Yes.
So that everybody gets to see, I sent in my $100, I sent in my $200.
Yes.
My $200 has grown by this amount of money.
Yes.
On the group, we have 100,000, but of the 100,000, I have my 3,000.
Right.
My 3,000. So it has gone to that level of detail of explanation. So yes, if you know some of those, I'm happy to help.
Okay.
I'm happy to help.
What would you say are the top 5 investments in Uganda? Like, personally, just for yourself. Just tell us, your top 5.
For myself. Okay, I didn't see this coming. But first of all, especially if you have children, most of us live for our kids.
Yes.
So the first investment would be something that can really help me have liquidity to pay school fees. So I have a school fees account where I put small monies every month so that when school comes, I'm not struggling.
Yeah.
And my go-to is treasury bills, bonds, a money market fund, a collective investment that allows me to access this money in 3 months, 6 months.
Yeah.
So that's investment number 1. Investment number 2 will be having a roof over my head. You wouldn't want to be renting for the rest of your life. So I must say I'm almost done with my house.
Oh, congratulations.
Yes, but I've been putting small monies aside from buying the shell house to try and make sure it's done. So another investment I would really encourage people to do is invest in your home. Invest in that place you call home. Even when you're renting now, start looking towards setting up a fund where you put small monies, buy the plot, put away small monies, put those bricks on, start building. At least that would be my second investment. Now, my third investment, I would love something that brings money to me on a daily basis. So I'm looking out for small opportunities that don't need a lot of money that I can partner with, because I'm not going to go and do a small retail shop and manage it. But I'm looking out for people that are having those businesses that are not too expensive, because I have savings. I don't have to always think of safety all the time.
Right.
So I think I'm willing to take a bit of risk now at this point to invest in small businesses that can generate. So I co-invest with another person that is running the business.
Yeah.
So that helps me with the day-to-day living, you know. You need to earn daily. Don't just earn on a monthly basis. You end up being in so many dates because you're waiting for end month. So you need to look out for those small businesses that you can invest in and at least get a daily income, you know. My fourth would be, of course, paying myself. I pay myself by saving. So if I went out and had a very good Java's meal, it's good to treat myself, but I can't treat myself every day. So it's good for me to pay myself because I work so hard. Remember, I said my kids first because those are my responsibility. I'm coming at number 4 here. I pay myself too, where I make sure that at least I put something aside for tomorrow. So like a retirement account, where I know for sure I don't have to spend everything I'm earning today. Waste tomorrow too. Lastly, I think I also want to invest and impact on lives. Yes. I would love my dream is to start up an impact fund that is going to help people scale their businesses. Maybe I'll start with 5 businesses. I'm not yet sure what it's going to be. But 5 businesses where we get angel investors, people that are having money, but they're willing to make a bit of profit, but also create employment, create opportunities for others. So that's my 5th.
Oh, thank you so much. Fund. Yeah. Just to comment before Tina asks anything, your number 2 was having a roof over your head.
Yes.
There's some people who'd like to disagree with that.
I know.
And look at a house as a liability, because with a house, you have money going out every time.
True.
But when you're renting, it's like the expenses are not as many as that.
So it depends which kind of house.
Oh, okay.
It depends which kind of house. So it also comes to how much is it going to cost you. If it's going to be a 1 billion house, then I don't think I'm ready for that kind of house now. I would be really borrowing money. I need that 1 billion to make me like 13 million a month. I wouldn't invest in such a house. I'm looking at a very modest 3-bedroomed house that will fit the same budget as I am paying for rent. Not to go out because I've hit a jackpot and I'm building a 1 billion house at this point. No, I'm not ready for that.
Okay.
So it becomes an expense depending on how much you're investing.
Okay. Tina?
Yeah. I moved here like a year ago, just over a year ago, and I really wish I'd met her. Oh my gosh. Like there's
Money.
Yes. Yeah. So like for someone who is planning on moving back to Uganda, what would be like the best investment for them, do you think? So say if someone's moving back, because I think typically when you move back with savings. And the annoying thing is like if you have this information, then those savings can now work for you, but instead you use it as a safety net, and then eventually you creep into those savings, but they haven't earned anything for you. So like if someone's moving back and say they have, for example, like £5,000 as a safety net and they're coming back to Uganda, what would be the best investment opportunity for them? Would you say they put all that 5,000 in one thing, or would you advise them to break it up and put it into different things? Or
so it's very simple. I'll tell them to plan for 3 things. Liquidity, very important, because if you got that 5,000 and invested it in land, you can't eat that land. So diversification is very important. Plan for liquidity, like have some of that money going to an emergencies account where you can access and pay for utilities or food or feeding or your short-term goals. So liquidity is important. And there are different assets to invest in. Liquidity needs safety. So treasury bills, bonds, a money market fund, income fund, the things I'm talking about, work for short-term investments. Now, you need to plan for security. Security is where you're going to take a bit of more risk, but you don't need this money now. So of that 5,000, how much are you going to put into a secure asset that needs a slightly longer period? You don't access that money like in 2, 5, 6 years, but you're going to get an investment. And all these are different. They're different because it depends on the customer's risk appetite. It's the customer's liquidity needs, because it could be 5,000 and that's all you have. So really it's a case to case. It could be 5,000 for 10 people, that the circumstances are different. So it's good to understand the customer, but I'll tell them plan for liquidity, plan for security. You need to risk your money, man. Please don't be too secure.
Right.
Look out for opportunities, even if it's farming, try it out. If you can't try it, partner. I think the best thing to do is that we are all doing small things very well, and we are comfortable with a small earning. Yet if the 3 or 4 of us come together and invest in your business, she has a very good outfit. So I was asking her, where did she get it from? And she's like, a Ugandan made it for her. And I'm like, are they doing it at scale? Yes, I'm like, are they doing it at scale?
Right.
Because if you're doing 10 pieces a week, it's going to be expensive. You're going to sell it 100,000. But if you can scale and start doing it mass production, the 4 of us can raise that money and then invest in her business, scale it, and guess what? Instead of her selling from Motive, for example, they're able to supply Woolworth, they're able to supply and also export to these different countries because it's a good outfit. So I feel like we're doing small things and we are comfortable with our small. Everybody wants to guard, and you're not letting in equity holders, because equity is the cheapest capital you can get. Than you to run to a bank for a loan, you're better off asking me for money. I give you my 10,000 USD and then I buy a stake in your business. So when you make a profit, you share with me. But we are so selfish that we want earn our small money in our small ways, and we're comfortable with it. So I feel like that's what is lacking. Scaling businesses and not doing small things individually, but letting other people join that same investment and you all take a share of it.
I do have a question. It's pertaining to kids, to children. So let's assume someone out there is like a young person, and they would like to have kids maybe in the near future. What's that, apart from saving money for kids, like putting money aside per month for kids, what else can they do to make sure that kids are safe? Or set, like you don't want to have to be there and then you don't have money for Pampers or something like that. That could happen. We talk about it, but you could literally find yourself not having money for certain basic needs when you have a child. Okay,
so when it comes to children, those are beneficiaries, and this is where insurance becomes very important. So investment is for us. If I invest money in a collective investment, it's for me. I have, like, it's my money, But if you have beneficiaries in play, it's very good to have insurance. And insurance will now take the risk. It covers a risk for you. Should anything happen to you, your child can still go to school. But most of us use insurance products as an investment. You get it? So you use your insurance policy as your safe haven for everything. Like I said, diversify. Insurance is good for kids. So if you have a child, please go get yourself an insurance cover, because then it helps you safeguard this child. You die, you're not able to work, you're able to earn money. They will give you 50% at the point of the incident. And then whichever years are remaining on your policy, it's paid up 100%. So you're earning 150%. So insurance is important for people that have children. If you have beneficiaries, please get an insurance product. It's important. But don't go ahead and get your individual money that you're planning for yourself for retirement and you're putting it in an insurance product. So just do enough for insurance and then the rest of it, put it in an investment account. So for children, insurance is very important.
We have a dating show.
Okay.
So let's talk about money and couples and people who may get together when they start to date and whatnot. What's the one advice you want to give people who get together and their money?
Okay, I've not been very successful with dating myself. I've not been very successful. Yes, please watch. I've not been very successful. So it's very difficult, especially with the African culture. Men, women, and money. It's a whole ball game where men feel like, it's my money, so I'm the one to plan. And at times I even see men who pass on and their wives don't even know which bank account the man holds. So it's like a whole African culture thing where you find that men do things also women do things, especially those that are successful women. They'll also go and do the same thing like the men.
Yeah.
So it's really difficult to talk about money in relationships, but I've also seen very successful relationships where they're open about money, they plan together, they do things together. I think that's the best way to do it. Like, be open about it. How much are you earning? What's the school fees? Who is taking care of what?
Yeah.
I'm a woman that believes in not 50-50, but
God forbid.
something on the table.
70-30.
And given that I'm a single mom, so I'm so used to taking care of the bills, I wish I had somebody that would actually come midway and we do
that,
this
yeah.
together. We do life together. I think it's very good for couples to talk about money. And when you're talking about money, it's not just what am I earning? And, women don't like to spend. He said, I bought you guys drinks. I'm generous.
Yes.
And I'll love you. Whoever is watching me, please be generous. Be good to people. If it's your husband, take part of that bill and plan together. Take part of the bill.
She's like, I was with you until.
Do some shopping.
That's why y'all single now.
No, wait. Oh, you want the lady to take part of the bill?
Yes.
Yeah.
Of our husband.
If you're working,
No, how you gonna get to that point? But okay, let me not start this relationship podcast. I'm gonna get you later. But let me just ask this. So in this market, there are treasury bills and then there are bonds.
Yes.
Okay. And I noticed that we did a episode with this one brother. I forgot what his name was.
Something.
Yeah. Shout out to the guy. He's in London. He's a Kenyan. But people don't know that how lucrative the bond market is
Yes.
in Africa.
Yes.
And where the bond market in the United States is, okay, it's safe, it's stable. Like, I need to get some more bonds. I'm over 40 now. So, like, in my portfolio, too much risk there. But the bond markets are sometimes as high as 15%, 16% I've seen.
10 actually.
What? Sorry?
It can go as high as 18.
18.
18%,
Okay.
yeah.
So tell the audience the difference between what treasury bills can do and
Yes.
the bonds. And do you
Yeah.
also handle those things too?
Yes, I do.
Okay.
And let me start with the bonds.
Mhm.
So bonds is long-term debt to government or a corporate institution that needs capital or needs money. So your savings, you put that money in for 2 years minimum. So it's a long-term, mid to long-term kind of investment. The way bonds are structured, you earn your interest or return every 6 months.
Okay.
If you go directly, you have to earn a coupon. It's called a coupon. So it's paid to your account every 6 months. So you're able to invest in a 2-year bond, 5-year, 10 years. In Uganda, they go as high as 20 years. In Kenya, they go as high as 30 years. So you are lending to government long term, okay? And you earn a coupon every 6 months. On the other side, the treasury bill is short-term lending. Short-term lending, anything below 1 year, 3 months, 6 months, and 12 months.
Okay.
So if you want to put aside money for 3 months, 6 months, 1 year, treasury bill, okay? If you want to put aside money for 2 years, 5 years, 10, 20 years, longer periods, you use a treasury bond. But to take away all this mix of bond, treasury bill, you're better off just going into a collective investment that either does short-term investments or long-term investments. So if you go to a fund manager and they say we have a money market fund, so a money market fund represents treasury bills, fixed deposits, and call deposits. If you find a bond fund, a balanced fund, an umbrella fund, usually it has bonds and money market mixed, sometimes some stocks. So it really depends if you're short-term, treasury bills, long-term, treasury bonds. Treasury bill pays you at the end of the tenure. So if it's 3 months, you earn your principal and return at the end of the period you've signed up for. For the bond, it gives you a coupon every 6 months. And yeah, you're able to earn every 6 months, they send that coupon to you. So you spend it or reinvest it. However, if you don't want to go through that hassle, get your money, give it to a fund manager to invest in bonds for you. So what happens if you use a collective investment scheme? Number one, you don't pay tax. Collective investments are tax exempt. So you have that tax advantage. Then there's what we call compounding interest. That interest earns interest. When the interest accrues and grows or comes into the fund, it's reinvested and your money keeps growing. Your interest earns interest. So there's that compounding effect. what happens to your money when you keep it on a bank account? It's okay. You can keep money on the bank account, but it will lose value. Inflation will affect your money. You have 100,000. 100,000 6 months down the road is totally different in terms of what it can, the value it gets you on the market.
Yeah.
Yet here in a collective investment, 100 that is invested over and over again, by the time it's 6 months down the road, it has grown.
Yes.
So it has a competitive advantage in the future. The value is there. And you're not affected by inflation. So inflation is a punishment to savers.
Yes. Yes. And things are getting expensive in Uganda.
Yes.
Like in the
Everything is
last
rising.
year, 2 years,
Yeah.
the market,
Yeah.
I mean, chicken
Not
breast
just
is
here, everywhere.
everywhere. But
Everywhere.
I'm even feeling it more here than I was when we were in Kenya. It seems like things are getting more expensive here.
Yeah, they are.
And here
Yeah.
is so weird because it also depends on where you are. Yeah. Like,
Everyone is increasing something.
in
They're adding
Bogolobi, do you
something.
know they sold like one tomato for 1K?
No, I bought one onion for 1,000 last week.
Guys,
Yes.
no.
One onion.
One
Yes.
onion for
How much did it
1,000.
used to cost?
It used to
You
get
get
like
like
1,000,
three or
you get
yeah,
like
or
5.
for 1K.
So even 5.
I'll give you one.
Yeah.
My God,
And what
I'm
year was this?
beefing with the lady.
This isn't that long ago.
Yeah.
This is like last year.
You used to get 3 for 1,000.
Yeah.
Yeah.
And now
Now
it's like one.
one-
Yeah.
one
And yet, if
onion
you
for
go
1,000.
just down the road to Nakawa, you can get 4 for 1K. So it's so crazy that like.
Oh, you can
depends
still
on
get
where
it.
you are.
Yeah, it depends on where you go.
Depends where you go.
Because
Yeah.
like when you go to Nakasero, it's a whole different vibe than these other markets.
Even Nakasero, what time you go?
Oh,
You go early in the morning when the farmers are there, it's cheap. You go at this time in the evening,
yeah.
yeah,
expensive.
you'll see what we're telling you. The
Oh.
1,001 onion, that's in Kajansi.
Oh,
The Kajansi market, yeah.
Yeah.
Kajansi is bougie.
Is it nice?
Not like nice, but it's out of town, and majority of those stalls or markets come to Owino and all these other town markets, and then because of transport and all that, becomes a bit expensive.
I see. I
Yeah.
see.
I'd wanted, so many people in the diaspora are being, is it robbed? I can't say robbed, but like they send their money back and then it's not being used in the right
Yeah.
way that they intended to be used.
Their
You know,
families, scammers.
Yeah, exactly.
Yeah.
What can you tell our dear people in the
So
diaspora?
just like you make that money by yourself, it's better to protect it by yourself.
Hello.
Okay.
So you go ahead and trust people to do things for you here. They also have problems.
Mm.
Imagine you're sending me 10 million shillings. I am not eating. I am starving. My kids are not in school.
Yeah.
What do you expect me to
Yeah.
do?
Right.
So we need to actually learn to do things on our own. I'm not saying don't trust your families. You know, there's some people that are trustworthy, but money is very tempting.
Yes.
So you'd rather send that money back, invest it, come back home and do whatever you have to do when you're here and you're able to supervise. Otherwise, your hard-earned money is just going to slip through the cracks. And please don't. At times, I don't want to be too lenient, especially with the ones that lose the money, because it's hard to make the money. So it should be even more difficult for you to lose the money. So instead of you trusting third parties or family to do things for you, put it in a safe haven, let it be invested, come back here, get this money and do things yourself. If you can't, then use professionals. Because you're going to use a relative to build you a house and they don't know anything about construction.
Yeah.
But you can partner with a property firm that is well known, that can actually build you that house, that can buy you that plot of land.
They can supervise
Do
the
yes,
builders.
do the things yourselves. If you don't know how to, find consultants, pay the money, and pay somebody the money
Yes.
to do the work for you.
Absolutely.
Because our relatives sometimes don't have the right knowledge to actually manage money or do these investments on our behalf. So
99% of the time, they never have the knowledge.
yes,
In America, too,
Yeah.
same thing.
Yeah.
They're not finance people
Yeah.
or business people.
Yeah. Have you invested in some stocks in Uganda?
yes.
What are your top 3? Just top 3.
Oh my goodness. So what I did is, I think the last direct investment I made on stocks was Nick. NIC at IPO. Yeah, I think I was in my senior 6 back.
Oh.
That was the first direct stock I bought, like directly. But what I do now, instead of me going to pick MTN or Meme,
That's
DFCU, I'm telling you, my top 3 already.
Yeah.
So instead of me going directly to buy this, I actually invest in an equity fund where a fund manager goes ahead and buys the stocks. So I have a cocktail of stocks that me to go and pick Meme or DFCU on its own, and then I'm struggling. I'd rather go to a fund, invest my money, and exit whenever I need. Because if you go directly, then you'll have those issues of,
It's kind of like an ETF.
Yes.
Okay.
Yes, it's like an ETF.
Yeah.
So I'd rather go buy a cocktail of equities through a fund manager that is investing in all my top 5. And different fund managers have different funds. They have balanced funds, or they have equities funds where you can invest and you don't have the direct exposure to go through a broker and then have all these certificates and they're running around. So I'd rather buy a fund. So I invest through equity funds.
Oh, okay. I think that's wise.
So I use a professional to do all the hassle for me.
Oh, I like that. Yeah. But would it hard for some people to own some stocks? Just own something somewhere. Just buy it.
Again, investment for dummies. So back to bonds. How much would somebody need to get into that
question.
here in Uganda?
10,000 shillings.
Really?
10K.
Okay.
$3.
It's not 100.
No. Xeno is 10,000. Sanlam is 20,000.
Oh, when you go through the fund. Oh,
Yeah,
okay.
when you go through the fund. But when you go directly, it's 100,000.
Yeah, I was wondering.
If you're going directly through your bank and you're not using a regulated fund, it's 100,000.
Yeah.
So would you advise going directly or not?
I can give you the advantages of not going directly. So instead of you going to your bank, like I said, it's hassle. It's too much work. You have to be there.
Yeah, we were there, right?
You have to be there. You have to fill paperwork. You have to
Oh my God.
know which stock you're going to buy or which bond, which year. So instead of me going through that hassle, I use a professional. I am not paying tax. I'm not paying any withholding tax if I'm investing through a collective investment scheme. I'm having compounded interest. My interest earns interest. It's invested automatically until the time I need the money. The amounts are less. Instead of you investing 100K for each time you're going to go and invest in a treasury bond, here with 10,000, with 50K, with 30,000, I'm able to invest anytime. And I can exit anytime. And I can track, because if I go directly, I'm not going to have a dashboard from the central bank.
Yeah.
You just have probably a certificate and you can only go and interface with your bank when you want to liquidate or when you're receiving your coupon. But here I have an interface, I'm tracking, I'm able to access part of my money, I'm able to top up. Now the other side, if you go directly, then you need to have all this hassle of renegotiating a rate. Every time your coupon is paid, you're investing at a different rate. So there's that back and forth of paperwork that you wouldn't want to put yourself into.
Yeah. And there's an issue with Ugandan banks. I'm sorry, like when they say, oh, you can come to us and get bills and bonds through us, they make the process so hard because the investment banker may not be there, or the investment banker will only attend to like that big clients. Now you who is there with your dreams, like, oh, I hope to own an investment bond and whatnot. It's a hassle.
It's a bit discouraging.
Ugandan banks need to get it together. You are not doing what you tell us you're going to do.
We can help those banks. We can help those banks. I really don't want to really talk so much about banks. I'm not in banking. But at least I know, because customers come and they're like, you know what, it's a whole hassle, especially when the coupon is paid back to you and then you have to go back and reinvest it. I think it's around innovation. Maybe banks need to partner with fund managers and make it more easier for people to have access to these things. Because imagine if I go through you directly, I'm paying tax. There's a tax efficient way to make the investments. So probably it's now innovation. Banks need to just come together with fund managers and come up with products that, make it very easy for you to just use your star 165 and you're in there. You don't have to walk to the bank.
Don't hustle with banks
and
anymore,
feel so
guys.
much paperwork.
Just go to the fund managers. Trust me, bank is not the way you want to go. And someone can lie to you that they've gotten a bond for you and then they've not done anything.
Wow.
Because there's no way. It's a whole thing.
That's sad.
We'll get back to that.
Sad.
But yeah, Sharon, any last words for our people?
Okay, so my name is Sharon, like I said. My last words to you is check me out. I'm on LinkedIn, I'm on Twitter. Those are my my favorite two social media accounts. Reach out to me. We can have a conversation. Reach out to them. They'll give you my contact. I'm happy to help you, especially looking at the options on the market. What can you do? I'm happy to have those conversations. Legacy Hills Investments, we are located at the Innovation Village in Ntinda.
Okay.
Yeah, we're a small startup company. Yeah, we are located at Innovation Village in Ntinda. So feel free to reach out to me. LinkedIn, Twitter, Facebook, not so much, but yeah.
Even email, we'll show you.
Yeah, yes, honestly. Yeah, Sharon at legacyhillsinvestments.com. That's my email. Send me an email. Let's have a chat. I'm more than happy to help you with the options on the market, especially if you're looking at financial assets. That's where I'm an expert. Don't come to me for real estate. I can link you to them, but yeah, that's where my specialty is. Liquid assets, investing your cash, getting it back in cash, not fixed assets. Yes, that's where my specialty is. But yes, I have a few partners as well. So I'm able to point you in places.
The right direction. Well, thank you so much. Tina, our last words.
Oh no, thank you. Honestly, it's been like a really good conversation.
Yeah.
Oshie?
We'll bring her back. We'll put it on the community tab for questions you may have the next time.
Oh yeah, that would be nice.
Yeah, and thanks for watching, I guess.
Yeah, guys. If you have anything you'd like to share with us, email us at teamkenganda@gmail.com and follow us on all our social media pages at Kenganda Nation. Also subscribe to the Pan African Dating Show. We'll see you guys next time.